Morning, Steve Freed in Chicago with the morning grain comments. Well, happy Friday, and this is the last Friday in the month of March. Certainly March will be remembered for a lot of volatility, a lot of price changes, and this war that's going on in Ukraine. April should bring us more clarity as far as the global economies, maybe the war in Ukraine, and spring growing conditions for the Northern Hemisphere crops. Overnight grain prices are lower. I think yesterday's export sales data was disappointing. I think the market is looking for more demand to push prices higher. And I think we're taking some risk off going into month end, quarter end, and next week's USDA report. Again, market's looking for more wheat acres and more soybean acres here in the U.S. than last year, and maybe less corn. We're also looking for stocks of corn and soybeans to be bigger than last year, and wheat lower. We have seen, especially in the wheat market, longs moving from the nearby contracts to more deferred contracts. In the wheat market, we don't see the export demand that's going to support our marketplace, and if the war continues, the wheat market might be tighter down the road than right now. And we also hear that Russia is sending out some wheat to countries like Turkey and Egypt. In the corn market, I think the market's disappointed in export numbers, and some people who had raised their exports above the USDA is now moving it back closer to the USDA numbers. We're still waiting for China and see if they're going to buy some U.S. corn versus the Ukraine corn that they have bought but not yet shipped. And in the beans, Brazil is offering beans for export nearby, which is cheaper than U.S. Seems like the August position in U.S. is cheaper than Brazil. And so again, we may be kind of backing off here as far as soybean prices now below $17 until we see more demand and see what the acreage is actually going to be and the numbers that the USDA has next week. We'll be waiting to see what the Fed does as far as interest rates are concerned, but China might be already in a recession. Germany may be in a recession, and the key here is can the Fed fight inflation while at the same time avoiding a slip to a recession here. And also, seems like traders are backing off as far as volume is concerned, especially in the grains, as they wait the USDA report. So we're a little bit lower, and I hope everybody has a safe weekend, and we'll see what the USDA has in store for us next week, acreage and stocks report. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.